Vetting a sponsor is so important, but vetting a deal is also really important. But when you're stepping into a new investment space, it's hard to know what questions should I ask? What should I expect? Because it's a new language. So let's go through some questions that you're going to want to ask to ensure that you are investing in the best deal possible for your goals. As I mentioned when we were talking about vetting a sponsor and the general partners, you want to make sure that you understand, why are you investing in this market? Why are you sold out on this market? So understanding the actual market where the investment is super critical. After that, you also want to consider, are we overpaying? One way you can know if you're overpaying is if everyone else is buying units for $30,000 a door and this particular offering is at $50,000 a door, you automatically know there's something going on here and there needs to be a really great explanation, or we're seriously overpaying. Sometimes when people are looking at deals, we're starting here. Okay, so we've spoken about vetting the sponsor, but now let's talk about vetting the deal. I'm going to be really, really honest with everyone here. We've spoken about vetting the sponsor. Now let's talk about vetting the deal. How do we know this is the best deal? It's a little simpler when we're buying a new home in our community where we've lived for the last, 5, 10, 20 plus years, right? We understand good neighborhoods, in questionable areas. We understand where the values are going up and down because we're familiar with the market. When we're stepping into apartment syndications, we don't have that same luxury. Oftentimes we're investing in markets that are very far from where we live, and so we are really relying on those sponsors bringing us really good information. And here's the thing, we have these really fancy spreadsheets, and there are all different sorts of ways that those numbers can be manipulated. Some people say, well, you're pulling the levers and you're figuring out, what numbers make sense. And so you really want to understand, how did you come to these numbers? One of those levers that can be pulled is rent growth. So on our spreadsheets, we have a way that we can see, well, if we raise rent by 1%, every year, or 2%, or whatever percentage it is, we're able to see what happens to all the other numbers. But guess what? What if you can't raise rents like that? So you really want to ask that question about the deal. You really want to understand that as this offering was being underwritten, right, as they're going through all the numbers and putting in all the expenses and coming up with projections, when it comes to rent, you really want to ensure that the rent growth makes sense with the market. Understand what they are doing with the rent growth and why they are doing that, and really ensure that they have a firm explanation as to why they believe that they can have those rent projections that they have. Follow that up with the other question of, and what if those rent projections don't happen? Does this deal still make sense even if you can't raise the rents in that way? As much as you're hiring the general partners to be your voice and to be the hands and feet taking action, well, they're hiring different people to work. Arguably, the most critical person that they are hiring is the property manager. The property manager is going to ensure that the different contract services, maybe pest control or lawn care, pool maintenance, you get the idea. That property manager is going to ensure that quality tenants are put in place and that different contract services are performing and that their rates are competitive. Speaking to quality residents, This is imperative to executing a very solid business plan. When there's a lot of turnover, right, when a unit is having a new resident move in and move out on a regular basis, that's very expensive. You might have new carpet, new paint, not necessarily every single time, but there are expenses that go into preparing the unit for the next resident. So it's important that you have happy residents. Does this property manager have the ability to create a community that people want to stay at? Something that really got highlighted during the pandemic was, well, what can the occupancy be and we're still breaking even? So a great question to ask is, what's a break-even point on the occupancy rate? Can we, still pay all the bills and keep the lights on and we only have, a 20% occupancy? Remember, you're in this deal. It's an investment, and investments are intended to, grow your wealth and your money. And so you want to understand, what is the structure of this? Who's getting paid? How are they getting paid? When are they getting paid? How often are they getting paid? So for you as a passive investor, you might ask, well, I'm a passive investor. Are you going to give monthly distributions? Are you doing quarterly distributions or annual distributions? Annual is far less common. Quarterly is kind of a standard. Monthly, again, not as common. So you want to understand, what are my expectations and what should I expect to be receiving? From year to year, those expectations are going to shift, but they can show you on the business plan. In year one, we're expecting maybe 2 or 3% because we're, stabilizing this property. We're doing these CapEx projects and we're, implementing everything. And then following that, you can expect that those are going to increase. Again, it completely depends on the business plan. So you want to understand, what's your business plan, and manage your expectations by knowing what is the gradual increase of my investment over the holding period. You also want to understand what sort of financing they are securing the purchase with. If there are big projects taking place at the property, then more than likely there's going to be a bridge loan on the front end. And then when those projects are completed, there's more than likely going to be new conventional secure financing to carry through the rest of the hold period. These are things you want to understand. You also want to understand, well, what's that interest rate? Can it fluctuate? Do we have it locked in? And what's going to happen if we can't secure this type of financing in the future? So you want to really understand what the financing looks like on the property. Remember, this is just a global general view of great questions to ask when you're trying to vet a deal. You might have some more curious questions and you might want to get into the granular and have a deeper understanding. So feel free, if that's you, feel free, head over to the 3 Keys website, schedule a call with me. We can hop on a Zoom call, share a screen, and you can see exactly what's going on, and we can walk you through so that you can feel confident with this process.